we have Philip Wee, Senior Currency Economist at DBS Bank, joining us from Singapore. And Philip, we just got those Thai GDP numbers coming in faster, way faster than expected. What did you make of them? And are you surprised that we're seeing gains for the baht? Will we see even more gains for this currency?
Well, generally the numbers are definitely better than expected. I guess most of the upside surprise really come from the fact that manufacturing production index hit an all-time high in December. So, and the other thing is, I guess Thailand is benefiting quite nicely from the recovery in the external sector. As for the baht, we've always liked it based on its international liquidity position. Essentially, what we like most is the fact that Thailand now has foreign reserves of 140 billion. That's more than, that's about twice the level external debt that they have. So overall, coupled with record high sort of trade and current account surpluses that we saw last year, and we expect, the surpluses to still continue on account of the export recovery for this year. And so we sort of penciled in a lower dollar baht forecast of about 32.3 for the end of this year.
Okay, well, let's check in on the baht once again to see where it's trading after those Thai GDP figures coming in better than expected. We have the Thai baht over this 1 year lower, but right now let's check on how it's trading. 33.15, weakening slightly against the U.S. dollar at this point. You expect some further weakness, do you, Philip?
No, in fact, we're always looking for opportunities to buy the baht for the reasons that we have stated earlier. I mean, for medium term, we always like to focus on fundamentals. And I think the only thing that was sort of holding or preventing the dollar baht from moving lower was really this euro weakness that came on the back of the Greek crisis. So, but we believe that once that is over, and especially once the Chinese comes back in to resume the appreciation of the Chinese yuan, that we should turn our focus back to global imbalances, which inherently is a weak dollar story.
Yeah, let's talk about the euro at this point, Philip, because it has been a much battered currency, as you mentioned, trading at 136 and change versus the U.S. dollar at this point. Do you see more losses ahead for the common currency in Europe, since the DBS was probably one of the more bearish banks on the euro?
Well, essentially, we are actually a dollar bear house. Okay, for this year, I think the major challenge for not just us, but I think for most of the players, is that we are sitting on a tiger that we are afraid to get off. That tiger I'm referring to is the Chinese yuan story. So if you look actually at most of the forecasters, they are still inherently dollar bears. It's just that in the short term, I think they are focusing pretty much on the Greek issue, which we think is a credibility issue surrounding the data and sort of the debt and deficit. And but once an end game, we remain mindful that the market has record short positions, and that once an end game materializes, like what we saw in Eastern Europe last year, also about this time, that the euro can actually, once unwinding come, euro can actually also, it's a two-sided risk. It can also bounce back up again.
Okay, Philip, you mentioned that DBS is a euro bear house. At this point, you were predicting maybe a dollar bear. Sorry. Yes. Okay. So what about for the euro? Because your euro forecast was 138 against the U.S. dollar, which was one of the lowest, on the street. And right now, the euro has already broken through that level. So where are we going to see it end up at?
Well, we're still keeping the 150 by the end of the year. Because we have a forecast for the Chinese yuan to resume appreciation starting from the second quarter. And I guess in the short term, the other thing about the interest rate differential that you were mentioning about against the U.S., one thing you may want to take note is that in 1994, when the U.S. rate hike cycle started, that was actually bearish for the dollar. It wasn't bullish for the dollar. So that was an interesting thing that we've picked up from the past as well.
Okay, so where do you think the dollar is going to head then? Maybe against the yen, you're looking for 150 versus the euro currency. What about versus the yen and other major ones?
I think generally the only reason I can see why the euro, I see this as a euro correction. In fact, the 150, the retreat from the 150, I think most people have to be mindful that that came after the top EU officials went to China and came back empty-handed on the yuan appreciation. And so they felt that since this was a U.S.-China problem in terms of the global imbalances, there's very little reason to why the euro should continue to bear the burden of adjustment without a reciprocal yuan appreciation. So at this point, I would still like to view this as a correction and not a structural play. And I think there's a big difference between markets trying to link the Greek crisis with the ERM crisis that we saw in 1992. Back then the single market wasn't formed yet, and today it is formed. And there is solidarity as well. Right now, at least there are signs of that emerging. So it's like, so the market's moved from trying to break a chopstick to now trying to break a bunch of chopsticks.
That's a tough task, isn't it, Philip? Okay, thank you so much. I hope you feel better. That's Philip Wee, Senior Currency Economist at DBS, joining us on the line.